The deal could value MMC Port Holdings, the country's biggest port operator, at more than 12 billion ringgit, $2.7 billion, and attract global investor interest in infrastructure assets. MMC Port Holdings is owned by Malaysian Tycoon Syed Mokhtar Al-Bukhari, who is looking for a partner to invest in his ports business. He may sell up to 30% of MMC Ports, which has 7 ports in Malaysia along the Straits of Malacca, one of the world's busiest shipping lanes. The sale could also pave the way for a potential listing of MMC Ports on the Malaysian Stock Exchange in a few years. The deal comes at a time when global container volumes have soared due to supply chain disruptions and congested ports, making port assets more attractive to investors. MMC Ports is not the only port operator in the region that is exploring a sale. PSA International, owned by Singapore state investor Temasek Holdings, is also considering selling its 20% stake in CK Hutchison Holdings Ports business, which is valued at several billion dollars. MMC Corp, a Malaysian conglomerate owned by billionaire Syed Mokhtar Al-Bukhari, is planning to sell a stake of up to 30% in its port business, MMC Ports, to a financial investor or a company. MMC Ports is the largest port operator in Malaysia, with 7 ports along the Straits of Malacca, one of the world's busiest shipping lanes. The deal could value MMC Ports at more than 12 billion ringgit, $2.7 billion, according to sources familiar with the matter. The stake sale is part of MMC Corp's strategy to unlock value in its assets and reduce its debt. MMC Corp also has interests in energy, construction and engineering. The company reported a 92% jump in first-quarter pre-tax profit to 221 million ringgit, boosted by higher contributions from the port of Tanjung Pelepah, PTP, which handled 9.7 million 20-foot equivalent units, TEUs, of containers in the stake sale could also pave the way for a potential listing of MMC Ports on the Malaysian Stock Exchange in a few years, as the company seeks to capitalize on the growing demand for container shipping and port services. Global container volumes have soared due to supply chain disruptions and congested ports, creating opportunities for port operators like MMC Ports to expand their market share and profitability. MMC Ports has recently signed a deal with Ramco Systems to digitalize 5 of its major ports, including PTP and Johor Port Berhad. The deal will enable MMC Ports to automate its operations, enhance its efficiency and improve its customer service. MMC Ports aims to become a leading digital port operator in Southeast Asia and beyond. By selling a stake in MMC Ports, MMC Corp hopes to attract a strategic partner who can bring in expertise, technology and capital to help the port business grow further and compete with regional rivals like PSA International and CK Hutchison Holdings. The stake sale is expected to attract interest from both financial investors and companies, especially those with exposure to the logistics and maritime sectors. MMC Ports is a Malaysian company that owns and operates 7 ports in the country. These ports are strategically located along the Straits of Malacca, one of the world's busiest shipping lanes that connects Asia, Europe and Africa. MMC Ports handles more than 10% of Malaysia's total trade volume and serves over 70 shipping lines. But MMC Ports is not the only player in the region. It faces competition from other port operators such as PSA International, a Singapore-based company that has a global network of over 50 ports. PSA International is also looking to sell a stake in its ports business, which could attract investors who want to tap into the growing demand for maritime trade. So why is MMC Ports planning to sell a $2.7 billion stake in its business? And how could this deal change the landscape of the port industry? In this video, we will explore the motivations and implications of this potential transaction, and what it means for the future of MMC Ports and its rivals.